This is The Market Capitalist, and I am Dominica Johnston. Thank you for tuning in. Food, commodities, and an investing opportunity. That's what we're going to talk about today. Investing, obviously, you have to be forward-looking to be successful because you're trying to anticipate something that's going to happen in the future that is either going to meet or beat what the general perception is. Based on what we're seeing today, we're seeing commodity prices increase and therefore many food prices appreciating in terms of their dollar value, and therefore causing things to be more expensive throughout regions and the world. If you see this trend continuing and commodity prices continuing to increase throughout either the months or years ahead, then you need to get in now or sooner than later into areas of investment that make sense, that are going to benefit from commodity price appreciation. I'm of that opinion that the amount of money that different governments around the world have put into circulation in the last year or two, and the growth of demand in developed and emerging markets for different types of food products and goods related to those food products is causing the demand in commodities and therefore the inflationary pressure on the prices of food we buy. I've seen it here in the United States, and it's very present throughout the rest of the world. I mean, India is a very good example where inflationary pressures are being felt clearly. They've been increasing their national bank's interest rate. Inflation still keeps going up, so hopefully they get a handle on it, but this is something that is indicative around the world, with many other countries experiencing this increase in inflation, and therefore what you're seeing is base goods, where essentially commodities, those base input goods, appreciating in price, and therefore the bananas that you buy, the rice that you buy, the soybeans that you buy, whatever it is to consume is going up. Food is obviously one of the baseline areas. It's a staple, everybody needs it, and it's often the first thing in the production of whether it stops at a banana or the extract from the banana is used for something else. So therefore it's a good way to gauge and capture an investing opportunity in terms of inflation. So what I would do if I was, and I am, trying to position my portfolio better to make up for these inflationary pressures and be ahead of the inflationary curve, would be to look at companies that are engaged in directly with commodities, whether producing them, or they're engaged in some type of affiliated process that must go on to either capture a commodity or enhance a commodity. For instance, a fertilizer company, Potash, POT, makes fertilizer that makes ground or farmland yield better crops, more yield per acre or per whatever the measurement is. Therefore, their product's going to be in greater demand if the crop land is in greater demand because of the crop that's potentially going to grow on that land. It's things like this that you have to look for. Monsanto, again, I've mentioned them a couple times on this program. They're making genetically modified seeds that are, whether it's drought resistant or resistant to certain strains of insects. That allows crops or farmers more certainty with their crops in terms of their yield. Therefore, their seeds are going to be in greater demand. So you have to look for companies like this that are in, not necessarily directly in with commodities, but are going to benefit from the rise of commodities. You can go out and, in terms of, if you're thinking of yourself, I want to invest directly in the commodities. Heck with the company that's making the seed and making the fertilizer, just give me straight commodities. You can buy a number of ETFs on the market that are designed to mirror the growth in whatever the set index is for that commodity's price, or you can buy a basket of related commodities that are supposed to mirror the 4 or 5 different commodities that ETF holds. An ETF, as we talked about before, is an exchange traded fund. Typically, like a mutual fund, but often not managed. Therefore, it's made to meet the market, not to beat the market. And that's good because that means a lower commission in terms of what you have to pay every year to be a part of that ETF. And the trade like stocks, so you can get in and out really quick. Beautiful thing. So that's what I see. I'm of the opinion that inflation's here to stay for a while. It's going to hit commodity prices because commodities are such a base unit in terms of everybody needs this stuff. And in terms of emerging markets, their success, their development will lead to just simply greater demand for those products. Couple that with an increase in the money supply, and you got yourself, I don't want to say a perfect storm, but you have a pretty good situation where inflation is going to be able to pick up rather nicely. Nicely, not meaning that it's good for everybody, but nicely in terms of, it's going to keep the pace. So if I was an investor right now, I would definitely look at my portfolio and say, how am I positioned to capture this investment opportunity? And on the second part, what areas of investment do I currently have that are going to potentially suffer because of inflation? Not everybody's going to benefit, not all stocks. If you have a company whose input costs are rising because of inflation, that's going to impact them on the end where they're actually selling these products, because most likely they're not going to be able to go out and say, customer, I've experienced a 20% increase in my input costs, therefore I'm going to pass my 20% cost on to you. Maybe they can, but probably they can't. And therefore, it's going to put constraints on their profit margins, and therefore, they're not going to probably meet the earnings expectations that the analysts have for them. So in the short term, that's probably going to do damage, but maybe in the long term, they can make it up. In any case, I'll wrap it up now. I've been kind of a little bit long-winded, but I think you get the point. Thank you for tuning in. Comments are always welcome. Thanks again. TheMarketCapitalist.com is the site.